Okay, so my portfolio is hitting all-time highs, even with these news of tariffs and whatever President Trump is doing, right? And that's what I like to talk about is that once you have a specific strategy, especially the one that I teach here on this channel and Clock Out Capital of selling cash secured puts and covered calls, the game is simplified. Once you change the mindset of always chasing appreciation and you start going after income, everything changes where I actually don't hold many shares of almost any stock. Maybe you have like 200 shares of Palantir left. I have some SoFi, and I have some HIM still. I don't, and Tesla, and like I don't have a lot of shares, but I have a lot of cash secured puts out that generated me income. And if I get assigned at some of these plays, I'm okay with holding those shares because then I'll start doing covered calls a little bit above my cost basis and keep collecting on that. And obviously, does that work all the time? No, because if there is a big market pullback, then I can't sell above my cost basis, and then I'll have to mitigate and sell a little bit below and try to play it close enough to my cost basis that if there's a crazy run up, I'm not too mad about potentially selling for a loss, but as long as I collected the premiums, I should still be up, right? So I spent one of the previous days of my days off work teaching someone cash secured puts because they were able to do covered calls, but they kept doing it way too far out, like 6 months, 8 months, 12 months, because their initial play for their covered call would be too close to where their stock price is. And they weren't willing to let go of their shares at that close. So they kept rolling it, getting premium, but only like a few $100. And they kept doing it every time the market made a big move. He kept trying to roll it for more money. But yeah, you're getting paid to do so, maybe a few $100. But when you think of the cost of doing that, you technically tied up so much money, so many shares, whatever you had, either money or shares in that specific play for so long, where if you collected maybe $1,000 over like the year span of a covered call, definitely wasn't worth it, especially if you had multiple thousands of dollars in that play. Like if it was like Nvidia or AMD, anything like that, because that $20,000 per contract could have made you $1,000 a month instead of just doing it $1,000 in a year. You could have made $1,000 a month per contract. Like simple in a 30, 45 day contract if you wanted to play closer, higher deltas and all that. But if you had 3 contracts running you like $1,500 a month as well with a lower delta, that is also amazing, where the opportunity cost is way better just to let yourself get assigned or let yourself have your shares be taken away from you and get on that other side of the wheel. That's why it's called the wheel strategy. You just don't do covered calls. And when I asked him what he was doing, for the most part, he would do covered calls and then he'd roll it if he was getting credit. And then if he had to sell, guess what he would do? He wouldn't do the cash secured put side because he was scared of it. And it was just not understanding the verbiage and understanding what to do. What he would then do is buy another 100 shares of said stock the next week and start doing covered calls on that end. Is that wrong to do? No, but it's, in my opinion, a waste of capital. It's not as efficient because if you just open up 20K and you don't want to play with like Nvidia or AMD anymore, and then you just bought that stock up again, the 20K is now stuck in that stock. Instead, you could have probably made up plays with HIMS or Hood or Palantir, anything. You could have multiple different stocks doing cash secured puts and making money off of it. So that's where I want to say again, it's a mindset shift that you need to do of collecting income and not always chasing appreciation. Because with covered calls, we already cap ourselves on the appreciation side. So where can we make money back? The money being made back is consistent income. Can you potentially make more money than the appreciation on the year of a stock just selling premiums? Absolutely, because like I said in a previous video, just as fast as stock goes up, it could drop down twice as fast. So just because the appreciation was there like today, it might not be there tomorrow. So the best thing to do, in my opinion, is take the money off the table. Take the gains, take the monthly income, and keep the money moving. That's how you got to do this. In my opinion, that's the best way to grow your account. And then eventually, once you hit the multiple millions, you could do this. You don't even have to do this anymore. Like, it's just fun to do. You gamify the stock market to give you money. Like, you don't have to be as risky or pay attention as much once you have the multiple millions, and you can just do your boring stock market index funds, ETFs, and all that, and just collect the dividends. But for the most part, to get there faster, to get there a little bit quicker than the 8% to 12% a year, you could potentially be making 4, 8, 12% a month selling options. And that's what I've personally been doing. And again, my goal by January was originally to get to 275. And now I'm already above 275. So maybe my goal should be 300K, because a lot of these options will expire worthless, or I'll buy them back and then my account balance will shoot right back up, because that's what happens. You collect a premium first and then the account balance goes up after expiration or after you close it out. And then I'll probably be close to 300K by January, and I'll just have to start having these bigger goals to build this portfolio up as fast as possible to that 500,000 range, then that million range. Because again, like I showed in some of my other videos here, year to year, 140K was the start for this account. Now it's at 276 as of today. What's, like, other than a market drop off, what's there to say if the market continues an upward trend or even potentially sideways? Why can't I get to 300K by January? Why can't I get to 400K by this time next year? You know? So if you wanted to learn more about this, I do have some resources in the description down below. If you don't know anything about covered calls and cash secured puts, I do have a course. Use code 36 for 36% off, the number 36. And then I do recommend that you join the free Discord, Clock Out Capital Discord. That's also in there, because that's where I put all my plays. There is a premium side, which is super cheap. It's literally $40 a month or $340 a year. And you'll see all of my strikes. I don't put all of them in the free one, but and then you'll have direct access to me and John, and we will go over all of our plays. We'll even do some talks on the weekends to go over what everyone is doing, what we're doing, what we're looking for. And that is the best way to understand the market, is to learn it from people that are just like you. I'm a nurse for 13 years. I still work as a nurse. I don't do this full time, but I'm making nurse income selling options. So food for thought, guys. Thanks for watching, and I'll see you guys very, very soon. Peace.